I think it's been pretty good. It started from a low base in the first half of 2009, and it's really established itself now in the first half of 2010 at a different level. We're about 15% up in terms of volume, and we believe that level is sustainable, but we see relatively gradual growth going forward off that level. And bear in mind that level is still significantly down from, for example, the 2008 levels. Yeah. So it's going to take us a good few years to get back up to those levels.
And in terms of where you're seeing that demand coming from, perhaps we can just break it down. Where is it strongest and where is it weakest?
Well, the manufacturing sector did recover strongly, particularly in our area where we have traded goods. So the traded industry is working well, and that's largely as a result of the strong rand. So if we look at our chemicals business, it's split into manufacturing and trading, and normally there's roughly a 50-50 split between those. But because the rand is so strong, we tend to find that the traded goods are growing at a bigger rate than the manufactured goods. And that's not good news for the sort of South African economy, because obviously the value add on that is a little less.
Yeah. Now, the numbers that we've been seeing are suggesting that economic activity is slowing. Are you beginning to see that through the numbers that you've just reported and also the first month of the second half that you've seen?
Yeah, Godfrey, we're starting to see the rate of growth slowing. So I think that's our view, is that it's sort of established at a base now, and that the growth will be relatively mild. And we've certainly seen that rate of growth slow down. But we do still expect some small growth going forward.
Are you worried?
We are worried. There is the possibility of a double-dip recession. We're very linked to global markets, and I think these days the link is virtually instantaneous, so that if the markets do drop in Europe and in the USA, then we would expect to see our markets going down again.
Yeah, that's manufacture. Let's talk mining. What are you seeing in terms of the mining industry? I mean, what we have seen of the metals is very, very strong growth in prices. Is that being reflected in the money that's being sunk into the ground?
Well, our mining volumes in South Africa did not grow by very much, and I think that's a warning to South Africa as a country. We're starting to lose our position as a mining company. All of the growth, or a lot of the growth that we got in explosives related to growth outside of South Africa, largely speaking the DRC and Zambia, where we got copper growth, and Indonesia, where in the coal market there. So the actual markets in South Africa, we haven't really seen volume growth to be large. It's of the order of a couple of %. And that is specific to certain sectors. We've certainly seen platinum being a lot stronger. Underground gold mining in South Africa continues to decline. It has declined for the last 15 years. That continues. And the rest have stayed roughly stable during that period.
And unfortunately, the story that's going to continue, particularly with the issues around costs. But what about the rest of the continent? What are you seeing there?
We're seeing good growth, particularly in Zambia and the DRC with copper. The gold mining in West Africa has been pretty stable. So gold mining in the rest of Africa has been pretty stable. And of course, from our point of view, which has been extremely beneficial to us, has been our market entry into Indonesia, where that's a coal mining market. And we've entered that market, and that's been very beneficial in terms of bringing the volumes through to our results.
Yeah, and in terms of the capacity, I mean, you increased capacity during the year, even when things were bad. Now, that capacity, of course, is sitting with you. How much of that capacity are you using?
Yeah, it's a very good point. All of our big capital projects are coming online now. But I just want to remind you, a lot of the output of those projects is related to substitution for products which we already have. Some of them imported, some of them we're upgrading technology, but basically we don't need an improvement in the market in order to be able to fill those plants up. So we do expect beneficial use of those plants to come through to the income statement really over the next 6, 12, 18 months, we expect to see that coming through.
And in terms of the two divisions, manufacturing as well, chemicals as well as mining, where are you sitting, and explosives, where are you sitting in terms of capacity now?
All of them we've got capacity. I think explosives at the moment, the capacity, they're fuller at the moment because they've grown their market outside of South Africa. And they're bringing their new plants online, and as those plants come online, their capacity will become available. In chemicals, we've got lots of capacity because, as I said, volumes are still significantly lower than they were in 2008.
Yeah. Now, of course, you have been big innovators, and I remember the last time that we spoke, you were speaking about your new explosive. How is that doing now?
It's doing very well. It's been very well received by the global community. It is one of the reasons why AEL has been able to get into international markets. I think AEL have done an excellent job of bringing global customers into South Africa, And I think people have been really pleasantly surprised at the capabilities that do exist here in South Africa.
And in terms of the numbers, in terms of its growth, how is that looking like?
The numbers in terms of
the growth of that particular product.
The product's growing very strongly. We've almost completely converted the local market for that product. So that's been one of the fastest conversions in the world. And it's slowing down now because we've done the local conversion. The growth now will be in international growth.
Any new ones that you're planning?
We've got lots of new products on the agenda, and we always do have. We invest in technology, and I think AEL has committed to bringing out 2 new products a year. So you'll see more of this coming.
I was going to ask which one is coming up this year.
I think it'll be more in the electronics field and in the field of information services to mining. That's the big area that AEL is currently working.
Finally, Graham, let's talk about the bogeyman, the rand. Now we've seen it running strongly at 7.29 yesterday. How worried are you by the current strength, and how much of a threat is it to the recovery, one, of your business, secondly, of your customers?
I think it's not really a threat to us. It's really our customer base that worries us. And on the mining side, as you correctly pointed out, the mines have been sheltered to some extent from the strong rand because commodity prices are high. But if you look at the manufacturing side, there's been no shelter for the manufacturers. A lot of the manufacturers either compete with imports or they export. And I think if you look at all of our customers, they've seen reduced margins. And some of the customers have completely restructured and gone away. And I think there's been a downsizing of the South African manufacturing industry really over the past year. And the longer this rand remains as strong as it does, I think a lot of that is still under threat.